If you or a loved one, say a parent or a family member, needed long-term care coverage and it costs, say, 10,000 or more a month, what would you do? How would you pay for it? Well, today we're going to talk about that because the impact of long-term care and your retirement and your financial security is completely tied together, and it can be disastrous if you don't have an effective plan. We're going to dive into critical information you need to know about long-term care insurance, including what it is and what it covers and what you must know. I've asked one of my financial transition certified advisors, Oscar Alvarez, to join us. He's an expert on the topic, and he is a wealth of information. He's both a CFP as well as a certified divorce financial advisor, and he has a wealth of information on a lot of areas of planning. So let's dive in. Hi, I'm Annette Bau, host of the Wealth Inside and Out podcast and founder of the Millionaire Insider. My mission is to help you simplify the money game so you can create a financially secure and fulfilled life without having to have a PhD or spend countless hours on your finances. You're going to learn how to think like a millionaire, stop worrying about money and wondering if your financial house is truly in order, and instead spend your time doing what you love. With over 3 decades advising 7, 8, and even 9-figure millionaires, and now joining that elite group, I'm in a unique position to help you make the best financial choices so you can create a secure financial future and retirement you love. This is the Wealth Inside and Out podcast. To get your free financial checkup, you can go to themillionaireinsider.com/FC. Our free resource today is our financial freedom formula. To access this free download, you can go to themillionaireinsider.com/FFG. This guide is the first step to help you create a financially secure future so you can stop worrying about money and enjoy your life more. And it provides details of all aspects of your financial plan, including your long-term care. So again, themillionaireinsider.com/FFG. MillionaireSeries.com copyrights all materials and intellectual property. This information is for educational purposes only. It is not intended to replace any advisor or specialist or to provide any investment, financial, tax, retirement planning, or healthcare advice. By accessing this content, you agree to hold MillionaireSeries.com and its affiliates harmless for results achieved or not achieved. For today's show notes, you can go to themillionaireinsider.com/72. So let's dive in. So hi and welcome, Oscar. It's great to have you here.
Thanks for having me.
Let's start with just an understanding of what is long-term care insurance, just so that everyone listening understands that.
So long-term care insurance is basically a policy that will pay for the policyholder's services that are needed if they need assistance with what are called activities of daily living, or ADLs. And those ADLs are things like if you need assistance with bathing, dressing, eating, getting from point A to point B, or maybe you have some cognitive issues. Any service that's needed to provide you with those activities of daily living, that's what a policy will cover.
Kind of goes without saying why it's so important, but can you share with the listeners why it's so important?
I think one of the important things that people don't like to think about or admit is that 70% of people over age 65 will need some form of long-term care during their lifetime. Now, that might be just a few weeks, or it could be years. But sooner or later, someone's going to need a little bit of help. And I think that's the important thing. The second thing, which you had already mentioned, is the devastation financially. If you're looking at somewhere between $75,000 to $150,000 a year, depending upon the level of care you need, that can be financially devastating for people. And lastly, and I think this is something that gets overlooked quite a bit, in my experience over the 30 years, the folks who have a long-term care insurance policy tend to be less stressed than those who don't. And I just see it all the time because they're able to answer questions quickly as opposed to someone who doesn't.
Well, adding to that, one of the things I would say is that my clients who have long-term care, knock on wood, have never needed it. And my clients who haven't have. It is so bizarre. It's so fascinating to me. And having just got done, and I do have permission to share this, one of my clients who refused to buy it, refused to. And she was my client for literally over 3 decades. And she ended up needing it. And literally for about 16 months, just spending down thousands, tens of thousands of dollars. It was so expensive. And it's just tragic to see when somebody gets in that boat, especially if they don't have the money to support it, which a lot of people don't. So if a person doesn't have ten or $15,000 a month for, what's the average? Two,
Three
three,
years,
4 years, 3 years? I was going
three
to say two
years.
to 4 years. And so if they don't have that kind of money, what are the options as far as the coverage?
Well, if they don't have that coverage, they're going to have to spend down assets. So, in my experience, what happens to a lot of people is they end up selling mom or dad's house in order to help pay for that coverage, for that service. For folks who don't have a lot or they run out of money, which is happens quite a bit, then there's Medicaid, and you have to qualify for Medicaid. And now your choices are very limited when you're on Medicaid. That's really the only options.
Can we talk about how the insurance works in different situations?
Okay, so the couple of things that you need to keep in mind is the insurance works a couple of different ways. The first one is some plans are reimbursement plans. And what that means is the person has to send in their bills and show proof of what it cost for the services they were getting. So they get the money back at a month or two later. The other type of policy is called an indemnity policy. And basically, the way that works is if you, let's say you have a policy for $100 a day, $3,000 a month, the insurance company is just going to cut you a check for $3,000 a month, just automatically. And you get to decide how you want to spend that money for your care. So those are really the two big things. The third thing is the policy and how you look at the policy. Most policies are developed in what we call dollars per day. For instance, I might say I want $100 a day, $200, $400 a day for my long-term care insurance. And well, that equates, you multiply by 30 and you get 3,000, 6, 9, whatever. It's usually set up in days. It's a little misleading, but that's basically the way it works. And most policies today, when you buy a policy, are what we call comprehensive policies. So that means that it's going to cover you regardless of where you're at. Nobody wants to go to assisted living. Most people want to stay home. So these policies today, they'll pay for the services you need at home. If you have to go to maybe an adult daycare, it'll pay for that. If you end up having to go to assisted living, it'll pay for that. And unfortunately, if you have to go to like a nursing home or memory care unit, then it'll pay for that as well. So they're comprehensive in that they will pay regardless of where you are, as long as you meet the requirements of the two ADLs, or the two activities of daily living.
Let's talk for 1 minute about hybrid plans, because one of the things that I have seen recently, we do a lot more hybrids than we do traditional, just because traditional is so expensive. And so can you add some comment on it? Maybe explain what a hybrid is. And I want to add one thing. In a recent case that we just placed, they actually made the client sign off saying they acknowledge that the premium is going to dramatically increase. Like it could be 10 times more expensive. It was just crazy. I'd never seen that before. But obviously, the insurance companies already know that those premiums are going to increase. So let's talk, first of all, about the difference. And then let's talk about the fact that how they can get away with it is they raise everyone's premium. And then what ends up happening is healthy people go on a new plan. And so then only people that are left are sick people. And it just keeps going up and up. And it's just crazy. So go ahead and
Right.
explain what a hybrid is.
So there's lots of different types of plans, and to get into the details will require more time than we have here, but I'll just kind of give you a good overview. There's traditional plans, which are pure long-term care insurance. And the big negative most people have with the traditional plans is it's sort of like your car insurance. You pay for it every month or every year, and you hope you never need it. But when you pass, you don't get anything back. And that's the way traditional plans generally work. There are some that do have what's called a return of premium, and that's obviously a little more expensive, but at least you get the estate will get all the money back should you never need the policy. Hybrid plans come in a lot of different flavors. So some hybrid plans come in the form of an annuity. Some of them come in the form of long-term care insurance with a life insurance rider attached to it. So in both those cases, if the money is not all used up, there's going to be something left, generally speaking. Some hybrid plans, even if you use all the money up, will still leave a small death benefit. And then there's life insurance policies with a long-term care rider attached to them. And so once again, those get very complicated. And there's lots of, if you're going with those types of plans, you really want to take time to learn and understand what you're actually buying, because there are pros and cons with each one of the plans.
Yeah, that's a great point. And I want to give you a resource. If you guys have questions or you want to ask more questions of Oscar, you can go to themillionaireinsider.com/support-request. And that will at least give you access to be able to go in there and ask your questions and then get a response. The other thing I want to add to that, that also is very popular, are annuity contracts that have long-term care riders. And sometimes people are not insurable. And so that can be another option. Or you might be in a situation like I am, where we really have the assets to fund long-term care, but at the same time, I mean, you don't know how much it is and you don't know what the future holds. And so I'm a little more conservative in that sense. But what we've done in both my husband as well as my retirement, as well as some of our personal monies, is invest in annuities and then have a long-term care rider on it. We've kind of blended it where we have one hybrid and then we've got a separate one tied to his retirement, my retirement. So we've got kind of the flexibility, but I just think that there is a definite potential risk for all of us to have a need for long-term care coverage. And most people don't want to spend $10,000 a month. Or you look at like my mother-in-law. Now, this was like years ago, and she was like 10 years ago, 12 years ago, and she was spending like $8,000 a month. And she lived for almost 10 years. The thing about it is, I mean, it can be, you might not be on the short end of that stick. You might be on the long end. So you just got to be prepared. I don't know if you
Right.
have anything to add to that.
Yeah, actually, I do. It's also for folks, because you mentioned about people who may not be insurable. There are now policies, what we call short-term care policies, that are basically just only cover you for a year. And the underwriting for those is significantly less stringent. And so there are options like that annuity and these short-term care policies as well. So they're
Oh,
relatively new on the market.
yeah, I was not even aware of those. So that's interesting. That's great. Wow. How long have those been available?
I've just discovered them about a year and a half ago.
Mm, wow, I like that. That's an option. I mean, it's not ideal. That's
Right.
better if you have somebody that can't afford it, right? I mean, I'm not the expert myself. I use a company that's a foremost expert, but it's probably the reason they have not brought that forward is because the clients I'm dealing with have money. And so it's not really an option. But if that's the only option you have, that is not a bad idea. I want to cover a common question people ask. Most people think that Medicare is going to pay for the services. Can you explain if they do and the details there?
Yeah, it's a little misleading. The answer is yes and no, but the yes is only it's conditional. So here's the way Medicare works. And if somebody generally what happens when somebody needs long-term care is there's some event has triggered that. So let's just say you fall and you go to the hospital. The requirement for Medicare is that you have to be in the hospital 3 days, 2 nights, and it can't be under observation. It has to be that you're admitted for the care, some sort of care. So if you spend the 3 days, 2 nights in the hospital, then what happens? Medicare will kick in. The first 20 days after that, Medicare will cover your long-term care cost. The next 80 days, Medicare will cover some, but it's basically a copay between you and them. And those numbers vary every year. But basically, you have 100 days where you're going to get some assistance for that. After 100 days, you're on your own. You got to pay for it all. If you do not meet that 3 day, 2 night requirement, then your Medicare is going to pay nothing and you're all on your own. So that's where I say it's a little bit of yes and a little bit of no.
Yeah, that's a good response. And then obviously Medicaid is if you have no money, right?
Correct.
Now, does long-term care insurance provide other benefits?
Yes, many policies do. Most policies will provide what we call respite benefits. And that's if a loved one or a family member is taking care of you, the respite care that somebody can be hired to come in and take care of your loved one so you can get a break, so that loved one can, that family member can get a break. So that's what is most common in policies. But other policies will also pay for hospice care. So if you qualify for hospice, they will help with the payment of the hospice care. And then some of them will also pay for occupational therapy. The driving force for any additional type of benefits is based upon the plan of care that is provided by your doctor. And as long as it's supporting for you to get better with your activities of daily living, then generally it's going to pay for that.
Okay, that's good to know. And then what should somebody know before they actually purchase a policy? Can you give like some of the specifics as far as benefits, policy period, all of those things? Because there's different choices.
Yes. Well, the first thing you want to look at is the daily benefit, and that's how much per day are you looking to acquire in your policy. The only thing I try to caution people with that is that when you look at the daily benefit, multiply it by 30 so you get a better idea of what it's going to cost you every month because everybody else works in what does it cost you per month.
Okay.
Insurance, long-term care insurance policies work on cost per day. So that's the first thing. The second thing to look at is the length of the policy. Policies will come in 2, 3, 5 year lengths. And there are a couple of companies now that will actually provide a lifetime care, but those are few and far between. So you want to look at what's the length of the policies. The third thing is inflation protection. Cost of healthcare continues to go up. And so all these policies offer, and they have to offer some sort of cost of living adjustment or what we call inflation riders. And that can be anywhere from 2% to 5%. So you just have to look at what makes sense for you and what do you think would be appropriate. I will say that even at 5% does not keep up with the cost of healthcare rising every year, but at least it's doing something. The last thing is the elimination period. And the elimination period is like a waiting period, and it can go anywhere from 0 days to 180 days. And basically, what that is the amount of time that you're going to have to pay out of pocket before the policy starts paying for your care. So if you pick 30 days and you know you're going to pay the first month, you pick 60 days or 90 days. So you have a known idea of what it is you're going to have to come up with initially before the policy kicks in.
Provide just a little bit more detail on that.
Okay, great. Talk about daily benefit. And it's let's just say we do $100 a day. What you have to be mindful of is where do you think you're going to end up? And this is the hardest question for everybody to answer. Well, I live in Virginia, but if something happens to me, I probably want to move close to one of my kids. And that's not in Virginia. So you have to kind of go through that exercise of where do you think you would end up if that happened to you? And
Oh,
then what you want to find out is what is the daily cost, the average daily cost in that area? And that's what you want to focus on. So the daily cost is important. So if you go to and I'll just give you an example. I had a client who was in a memory care unit. His wife was a memory care unit in New Jersey, paying $17,000 a month. He moved her down to Virginia because it was only $10,000 a month. Huge difference. So you have to know where you're going to be. That's the first thing. The second thing is the policy length of time that you choose. Now, 3 years is about the average, so I generally recommend at least get a 3 year policy. However, what you're really buying is a pool of money. So when we talk about 3 years, and I'll just give you an example. So let's just say we're doing $200 a day for 3 years. So what you've really bought, you haven't bought a 3 year policy. What you've bought is a policy with over $200,000 of money in a pool. And what you really bought is this pool of money. And so now if you went at $200 a day, that pool of money would last you 3 years. But what if you only needed $100 a day? Well, now that pool, even though it was a 3 year policy, but because you have a pool of money, that actually now becomes a 6 year policy.
oh,
So
wow.
don't get wrapped around the actual of how many years. Think
Yeah.
about it from the pool of money that you're going to generate over time, especially when you have an inflation protection on that. The last thing is the elimination period. And you really want to be careful with choosing your elimination period. You have to understand the policy that you're buying, how they categorize the elimination period. There's two ways they can do this. It can be calendar days, which is simple. Okay, so I have a 30-day elimination period in this calendar day, so I know 30 days from now the policy is going to kick in. But if it's service days, and let's just say you're at home and I need help 4 days a week, well, for me to get 30 service days is going to take almost 2 months. So now even though they're both 30 days, one's service days and one's calendar days. So you want to be very careful about choosing your elimination period.
Wow.
And the last thing is the inflation protection. And this is probably the toughest one. There's two types of inflation protection. There's what we call simple and what we call compound. So let me give you an example. If we start out at $100 a day on a simple plan, then it's the next year it's $105 and we choose 5%. So it's $105. This third year it's $110. So you see it goes up $5 every day. So at the end of 10 years, you've got $145 benefit per day. But if we take a compounding policy, well, now the second year it's 105, the third year it's $110 and some change, but by the 10th year it's $167.
Wow.
So now when you compare 145 versus 167, well, that's $22 a day more. Now we're talking $600 a month. Now we're talking almost $4,000 a year more in coverage because you chose the compounding. So be very careful about what it is you're choosing because it will make a significant difference.
And the inflation, right, can be really expensive. So you got to take that into account. And then
Yes.
just so I can clarify on the waiting days, calendar is like, say you have an elimination period and it's like it kicks in 60 days or 90 days. And then service days is where you're actually getting care. Is that
Yes.
okay? I just want to make sure of
Yes.
that. Okay. So is there anything else that our listeners should be aware of before purchasing or considering a long-term care policy?
Yes. I think the first thing is get one sooner rather than later. Long-term care insurance is based on age and also on your health. The difference between life insurance and long-term care is also very different. So when you're looking at a long-term care policy, they're not really looking at how long you're going to live. It's how are you going to live? Are you going to need help? Do you have back issues? Do you have leg issues? Are you going to need help with those activities of daily living? So that's what their focus is. So buy it while you're healthy and younger if possible. Women live longer than men. And so unfortunately, ladies, you're going to pay a little bit more for a long-term care policy. It's just an unfortunate fact. The one thing I do like to tell people is when you're trying to design a policy, and if income is an issue, to get the best bang for your buck is increase the daily benefit, go on the high end for the daily benefit and decrease, get a lower inflation
Yeah.
protection. And that said, the inflation protection is the most expensive part of the policy. And so there's ways to kind of give and take on that so that you can get a policy that's going to be able to really help you when you need it, but it's also affordable. And then lastly, I say, you want to speak with somebody who's qualified and experienced with long-term care, somebody who maybe is a certified long-term care certificate, somebody that has those credentials would be optimal because they understand what's going on in the long-term care world and what new products are out there as well.
Yeah, great point. Oh, this has been a wealth of information. I encourage you, for some of you that are going, oh my gosh, this is overwhelming, just go back and re-listen and take notes. But if you have specific questions, you can go to themillionairinsider.com/support-request. I want to thank you so much, Oscar. This has just been a wealth of information. I really appreciate it. And it's such an important topic, and it's something that impacts everyone. It's going to either impact you, your partner or spouse, your parents, your kids, someone
Yes.
it's going to impact. And so I really don't know anyone that has not had some level of need for long-term care in their family.
Yes, I agree. Thank you for having me. I appreciate it.
Oh, you're welcome. If you love the content of this podcast, please follow and subscribe to our channel so you get notified of episodes, and also give us a 5-star review and share a comment. We really appreciate it. Congratulations on taking another step to create a financially free life you love. If you're not sure about your financial future or that it's in order, or you are ready to stop worrying about money or possibly the fear of becoming a bag lady, ending up broke in retirement, or you simply are ready to know your financial house is in order so you can have a bright financial future, please go to themillionaireinsider.com/NSF. And that doesn't stand for non-sufficient funds. It stands for Next Step Finance. It's the next best step of what you need to do so you can avoid an NSF notice in your future. Again, themillionaireinsider.com/NSF. The number of women who were not broke or poor while working or married is staggering. The entire mission of the Wealth Inside and Out podcast is to ensure you have the information for you, your family, your friends, anyone who's willing to listen to it and apply it so that you can create a financially free life you love. Again, themillionaireinsider.com/NSF. Until our next episode, take one action that will help you create a financially free life you love. I'm Annette Ba'u, your host. All international copyrights are reserved. Bye for now.